Good morning, everyone. Good morning, guys. Welcome to our live market analysis. I hope you are enjoying your day so far. Your morning, your afternoon, your early morning, maybe your evening. Some friends from USA, from Canada, I suppose. And yeah, I think we are ready to start. So please feel free to say hi, good morning, whatever you want to say. You can use the chats. Alrighty. So let's start with the gold. Anyhow, I think I already mentioned in previous webinars that gold's seasonality is December, in January, February, pretty bullish months for the gold, especially December. Now here is a thing with this market here. Price made a higher high, higher lows, trading above the trend line. Okay, and there is a hidden swing low here, and it's something I provided an analysis for a company today, and it was when you guys start before you start trading. Let's say you open your charts, okay, and you see this picture here, and you assume that the market is moving upwards, but at some point you really have to start paying attention to the swings that they make the move, because I see many traders when they come on coaching, they didn't learn how to pay attention to the market. They think that, okay, this is just one bar pullback, so it's not important. But the market created this move. For one day, the market was trading down there, so why that's not important? Everything is important in the market. Okay, all the moves are important. There is nothing random. I hope that makes sense. So from this point here, we will see how it's gonna work. We have a double inside candle. If the price is gonna break below or above, we're gonna trade it accordingly. Okay. If you want to choose a direction to trade the gold today, looks like the daily chart, it's not going to be a very good time frame. Maybe the 4-hour chart for some price action, but for 15-minute, on the 15-minute time frame, we have this box. So price needs to break outside of this box, to be honest, in order to get some valid, let's use this one, to get some valid trading setups. What is that? Anyway, yeah, all good. So for now, lower time frame is not going anywhere, and it's still early. Yeah. Plus tomorrow on payrolls, markets they're gonna just drift around pretty much today and tomorrow until the event. Next one, let's check the German 40. Price closed above the 16,500 area. Although we tried to get some reversals from this long-term resistance, but this resistance, it looks like it has been broken so far. If price will close above the resistance today, it means there are the 2-day rule applies, and we will be looking for longs. Now, I'm not going to look for short setups today because there is no reversal price action. WTI, great move on the crude yesterday. Of course, it also follows the seasonality pattern vigorously. This one, last year we didn't have the seasonality pattern so far. Good morning for those that join us now. Bruce said, I'm a beginner. You're very welcome to our webinar. Nick said, ask, did I miss anything? We covered so far the gold, the German 40. Now we are on WTI. So price made a low. We have here equal highs, but again, this is a downtrend. Now we will be looking for the pullback to trade this daily time frame. Now, if you want to trade any other time frame today, let's say 15-minute chart, here it's a good spot. I like this pattern. This pattern here is very interesting. It's like an ascending triangle within a downtrend. Yes, an ascending triangle always has bullish implication, but when we find an ascending triangle in a downtrend, many times it has bearish implications. So a breakout maybe from this point with a stop loss above here, an entry there, maybe will be a good, will give also a good reward to risk ratio for some minimum 1-on-1 or 2-on-1. So that's with the gold. Hello, Nicola. Thanks for joining us. Nicola said, happy to be here. Nice to have you on this webinar. Malcolm asks, sir, did you see the drop in pound JPY? Yes, actually, all the JPY crosses, they massively dropped, and that's fantastic. Because why it's fantastic and why it's good? Because guys, since the beginning of the week, let's check with the Japanese yen cross pairs today. Beginning of the week, we make a comment that all the yen pairs are selling off, all of them. So we were looking for short positions on them. USD JPY, I didn't manage to get into any trade because based on the execution checklist I used, I didn't get any entry. So I have some criteria that I want them to match before I take a trade, and unfortunately they didn't match, so I didn't take a trade. Now here's the thing, did I miss the trade? No, I didn't miss because I didn't, it wasn't as per my plan and I didn't execute it. It just didn't appear based on my plan, so there is nothing. There's nothing to miss. And this, I see a lot on coaching traders. They believe that we missed a trade. You missed. Let me tell you when you missed the trade. If you did your analysis and let's say this was the sweet spot that you were interested to sell, and everything based on your plan, let's say, maybe you have a different checklist, a different plan, that's mine. If you had everything in a line here, almost all the parameters, and you hesitate to take the trade, then yes, you missed the trade. But as if we talk about my plan, at this point here, I was looking for the reversal and I measured the fib and I was expecting the price to penetrate and come a little bit higher than the downward trend line. This one is a downward trend line, but the price never even make it at least to reject the trend line. So for retail traders, this is that's not a tradable opportunity on this time frame. Maybe if you go on the 4-hour chart, it will have been a different story, or the 15-minute, on the hourly time frame. Maybe some traders, they see this consolidation as an opportunity and a break of somehow from here to the downside. But for me, it wasn't it had nothing to do with my plan, unfortunately. That's why I didn't take any trade. But again, it's bearish. If you ask me today what I will be looking on the 15-minute chart, I'll tell you I definitely will look for the next price cycle to sell. Next one, Great British Pound against the Japanese Yen. Finally, we have a defined lower low. So on the weekly chart, that's an interesting pair actually. On the weekly chart and the daily chart, the MACD printed bearish divergence or negative divergence in both time frames. So that was a strong, you see price makes higher highs and MACD makes lower highs. So good indication that this market is going to get weakened at some point. But on the weekly chart also, the price, it was a kind of an inside of, it wasn't a double inside, but it was definitely an inside candle. In the last 2 weeks, price didn't manage to create a new high. So on the daily chart, I was looking at this point here, the price to retrace a little bit and give some rejection so I can enter. But I didn't see it, and already I didn't want to enter here after the candle close, because if I was about to enter there, I'm in the middle of the move, I don't see any green candle, so there is no swing high to place the stop loss above. So the trade is very exposure, and regardless the market has a high probability to sell off based on the overall picture, the actual execution on this time frame had a low probability of success. So it wasn't good enough for me to take this trade. If I was awake at that time and I was taking the trade, let's say from here with a stop loss there, that would have been a different story. But what was the issue on this time frame is that the market was still making higher highs. So there were a few good question marks around this trade. Okay, but anyway, now we understand that the market made a new low, so we're going to look for some green candles to look for the next wave to the downside. Same with the euro. This failure swing high here, it happened last week, and this week now, last Monday actually, and now the price is moving lower and lower and lower. It clearly defined a downtrend now because there are 4 points. There is this low point. Whenever we're going to see the reversal, it's going to be lower than this one, and this high point is lower than this high. Therefore, the market is in a downtrend. So I'll keep an eye on that in the next week, of course. That will be one of the best pairs for me. New Zealand, Japanese yen. Also, the market now broke this structure here. The higher high has been broken, lower low, and a retracement at any point in the next few days will be good to look for shorts. Australian dollar, weak data on trade balance used today. Expectancy was to see some increased number, and we read lower than expected number, and the market reacted massively. An inside candle, break to the downside, very, very powerful pattern. So it makes this failure swing at the high, the valid swing high. And we will move this one up. We'll move this one to there. And then our low will become a low somewhere here, wherever the market will print it. So we change the overall. Oh, guys, sorry, I didn't read the comments. Can I ask Maria? Can I ask what is the plan for Australian dollar, US dollar? We will do the analysis. This could be the time to start selling Aussie dollar. Yes, correct. I will say there might be a nice pattern to trade the dollar pair. Yes. Would you advise us to take Australian dollars when the non-farm payroll is coming later tomorrow? Matt, or are those setups a day trading setup? Brandon, thank you for the setup. Matt, I cannot advise you what to trade, but based on the overall analysis, we see that Australian dollar was weakened after the Reserve Bank reported interest rates, and it's getting weakened as well after the trade balance event. Therefore, a strong non-farm payrolls tomorrow can lead to more weakness on the dollar, on the Australian dollar. So that can make it a good candidate. Swiss franc, one of the strongest currencies due to its a well-known currency as a safe haven, but against the Japanese yen now is selling off massively. For this one here, it looks like, was it an uptrend? Definitely it was in an uptrend, but after this move occurred, we didn't see any kind of swing high or low penetrated. But now it looks like we have some more clarity, and yeah, we might gonna look for some short on the Swiss franc as well. Canadian dollar was very, very range here, so the boundaries was the 1 and the 2, and in trading, at least those you're gonna stick and you're gonna stick around with my webinars, you will understand that here at MarketMinds Mastery, we learn to anticipate the moves. We don't react to any market move. Okay, we simply anticipate and we try to trade based on false breakout. Now, let me bring your awareness at this point here. This candle, everyone sees this candle, and it looks like the sellers will never stop selling this market. The reality is, how are you so convinced to trade hammers and long wick rejections at support if you don't learn how to anticipate that this candle that you see it's red, at the end of the trading session, at the end of this daily chart trading session, it means at the end of this day, can end up being like a hammer or a long wick rejection. Do you guys see where I'm hitting now? Every hammer and every long wick rejection always started as a bearish, full-on bearish candle. And the traders, because they think that whatever we see here, it's going to be there forever. They are not used to rapid changes, and they are not used to act on rapid changes. They think that this movie is going to go forever, where the fact is, and the reality is, at some point it might not, but it might turn to be a long week rejection candle. Okay, does that make sense? So learn to anticipate as well some events when you watch the markets. Euro Australian dollar, this is in a downtrend clearly. Now if you zoom out, you're going to say, okay, this is ranging, but you have to, if you don't trade 6 months or 1 year data, you trade the current moment, and you have to learn how to read the chart on the present moment. Okay, and it's something really I I I I put a lot of effort and time to teach on private coaching about this stuff. So yeah, if you want to really elevate your forex trading, you can reach out to me, and we can create a customized approach that can fit your trading needs. Euro against the Canadian dollar. Price penetrated the upward trend line. It's heading down. It didn't give us a good entry on the daily chart, but on the lower time frames, of course, let's say 15-minute chart, all these swings, they could be utilized for short positions. I didn't take any short position here, of course, because I'm not around to trade this one. I got a losing trade on the Euro New Zealand yesterday because of this week, but let's see what the market will do. Based on the recent past, the market rejected this support, and the buyers, they stepped in massively. They pushed the price higher. Here the buyers, they tried to push that. We was up to this point, it was good, but next day it took us out, which is fine. This is trading, and that's exactly how to approach the market. Guys, Hamilton, I will be interested in that private coaching. Hamilton, you just because guys, I think I cannot reach out to you here. I think you have to send me an email, or you find me on social media. Here is my email address for those they want to they want to know more about the private coaching sessions I offer, in terms of pricing, in terms of time duration, in terms of many things. And you have to, for every individual, for every trader, it's a different case. So please feel free to make the effort and send me an email. You don't pay by sending an email. At least you gather some information, and if you're not going to use them at the present moment, maybe you're going to use them later on, or maybe you never use them, but at least to understand what value you can get out of this. Okay. And yeah, it's all the time case by case. It depends on your trading experience, what you trade, and everything will be customized around your trading personality. And I see many people, they ask on these live sessions that they are interested about coaching, but I don't receive emails. So do you guys see when I post the email out? Do you have any difficulty to send the email? Do you prefer any other way to communicate? Just let me know. If you go on my profile, just very quickly, if you go on my profile here, you can go, I think it's here, about. And also here is the email, and you can send me an email. Okay, or if you want to find me on Instagram, on any other platform, you can do that. So, yeah. So that's it. Guys, I think we explained the euro, but we didn't explain the majors yet. Correct? Louis, yeah, yes, Ryan, it's on my profile. Louis asked, do you have any recommended book? Oh, too many books. Too many books. Depends how much you want to read. Yeah. If you want to start with market analysis, I highly recommend uh, John Murphy book, Technical Analysis, or Technical Analysis Financial Markets. If you want to start by psychology, then Mark Douglas is uh, the books Trading in the Zone and Trading for a Living as well. It's nice. Dr. Alexander Elder's book, it's a brilliant book. I love it. I read it a couple of times so far. It's a great one. But the problem I see, Cody, that's how do I work my profitability in the market? If you guys struggle to make profits from the market, really you have some lack of market information that you can't find them out there, and that's why the coachings are designing for, at least my coachings are designing for, to help you get the knowledge you need in order to trade. It's not enough to go on YouTube and see someone that posts 20 winning trades. That's not going to help you to become profitable trader. In order to become profitable trader, you need to learn how to read the markets properly from the market perspective. And don't get me wrong, it's something that free information, it's great, but at some point the real value comes when you are ready to accept the information. Okay, and that's why we have the coaching. As for me, for those you may wonder, if I do any other job, my job, it's purely education, market analysis, coaching. I offer services to brokers. I offer services uh, to uh, to smaller companies, to prop firms. So this is what I do for a living, and that's part of my job. That's why I have the coaching sessions. I also have a coaching package session. It calls Peak Performance Coaching, that I do only twice a year, but now I'm fully booked with that, so I can get more people on board. It's designed for 8 dynamic sessions that they host twice a week, so we go fast track within a month. As the title said, it's Peak Performance Coaching. Okay, I will launch that again next year, maybe somewhere end of January or mid of February. I'll let you know about that. But any sessions, we can do them. I can help you. Yep, that's all. So enough with this. Let's move on. Dollar index. We mark this market high here. That's the daily chart. So we do expect to see, first we break the trend line, the downward trend line, and that's a tentative downward trend line. No, actually, it's not a tentative trend line. It's a valid, because we have the third touch here, and it got rejected a little bit. Okay, so the break of the trend line is the first signal of market reversal, of trend reversal. But that's not enough. We need a second component, that is a new market structure, like a high that is higher than this one here. So far we don't have it. Let's see what's going to happen today or tomorrow with the non-farm payrolls. But for now, the market, maybe it's in a transition period. So a strong dollar can cause weakness on the dollar pairs, US dollar pairs. Australian dollar against the US dollar. Price literally came all the way to the S1 support around the 0.6521 and 3. Something wrong with the audio? No, I think the audio is totally fine. Someone asked about the audio. Audio is fine. Ryan asked, is it transitioning to bullish momentum? Maybe yes, or maybe it's gonna stay as within a range. All right. So let's see what's going to happen here, if this will be a pullback or it's going to be a false breakout at this inside candle. So there is a resistance, an inside resistance here at the higher low we had before. Now this is not relevant anymore. So let's see if the market will respect this resistance here based on this swing low. This one is not relevant now. On the lower time frame, 4-hour or 15-minute chart, yeah, market is retracing, which is great. When market retrace after a downtrend, it's a healthy market move, and we want these moves actually. So pretty still bearish on this one. I don't see any signs of bullishness. Price really lost this valid structure like here. So let's see what's going to happen. Maybe it's going to come here, failure swing and move lower. Maybe it's going to come here, shallow retracement and sell off. Euro and the US dollar. Finally, after 1, 2, 3, 4, 5, 6 days in a row of lower highs and lower lows, it's time, I think, to see some correction for us to get into some moves with the downtrend. Pound USD, I'm still in a trade here. I'm holding a short trade. I go for 1 to reward to risk 1.5 to 1, so I risk 1 to make 1.5. And why I don't go for 2? Because there is a strong support beneath this low, and it's a low probability trade. Therefore, my risk is less than the normal risk. And what do I mean by that? Let's make it clear. For example, a trader that risks, let's say, 2% when the market is trending on low probability trades, like trades against the trend but with a strong resistance and a good price action setup like this one here, bearish engulfing, can reduce the trading size to, let's say, 0.5% or let's say, or 1%. Okay, so for someone who risks usually 1% on every trade, maybe reducing the risk to 0.5% if you want to take low probability setups. All good, guys? Any questions so far? New Zealand, US dollar. New Zealand is relatively strong, but let's see. This one here, it still maintains the bullish bias. We don't have any sign of reversal yet. USD Canadian dollar, that will be the, for me, that will be the best. Now let's rearrange a little bit the let's rearrange a little bit the lines and the level. So this one here is a relevant support now. If you are trading on the daily chart, you have this swing here, and then we go for these lower points there. For resistance, I would really like to use this one here. Price is a little bit lower. Let's check the fib from high to the low. This is the area of 61 and 50. So ideally, I would like to see the price to move a little bit higher, but again, yesterday, a reversal price action here can cause the dollar to move lower. For our chart, for traders, they like time frame correlation setups. It's like if this is gonna form a bearish engulfing, maybe that will be a good one. But it looks like that maybe the market is gonna rally a little bit. Again, I don't have that crystal ball to know where the market is gonna go, but just from experience. USD, Swiss franc, it's still playing around here. To go long on this one, no. To go short on this one, no. There is a strong monthly support sitting here around the 0.86, 89. USD, Japanese yen, all the way short. So lower time frames if you're trading intraday. Watch out, maybe during the London session we're gonna see some consolidation here, and maybe during the New York session the price will break outside of the consolidation to the downside. Okay. Pound yen, same. We analyze all the Japanese yen crosses. We analyze the euros, euro CAD, euro New Zealand. Let's check the poundos, pound CAD, pound New Zealand. Poundos within this consolidation, there is no swing here, swing high, swing low, nothing. Pound Canadian dollar, I'm looking for a bullish engulfing setup here. So I already marked my areas that, and I will place an alert at this point. So if the price crosses this price level, I would like to check this market again for a potential buy stop order above the high here with a stop loss below there as per my plan, and a take profit at this high here. Okay, as you see, what I teach you on this webinar is what I do, and I say exactly what I do, not what somebody else does, not what I think. That's what I trade, that's how I trade, and that's exactly what I show you. I trade a plan. I don't trade the market. I have a plan and I trade the plan. I spend time on the market and I make very, very, very detailed analysis. And of course, that's my job as well. Not only to provide analysis for large funded traders that they want on a day-to-day analysis for different currency pairs, or for some other companies that I send them PDFs out. If you guys want, I can also send you price list for to send you detailed currency pair analysis with all the marks. This is not exactly how I do it. So one example, it was what I did today. For example, that's the gold, and I write a text that it's relevant, and I explain you everything what can happen, let's say on the daily chart and on the hourly time frame. Okay, so you have some relevant for the day. And yeah, so I create also my plan, my watch list, and I trade accordingly. Next one, Great British Pound, Kiwi. I don't like this one, to be honest, because I don't want to take any buying positions unless the price touch this support. As long as the price trades above the support, I'm looking for shorts. So, but I need to see the price moving a bit higher, at least at this level here again. Now, that wasn't a good entry for me as price action trader. Uh, Alberto said it is best to trade a plan because the market is usually very random. Yes, that's very true. Rob said this is good to see some breaks or wait. Rory, it short is very strong. Yep. Australian dollar Kiwi. I hope the price will retrace so I can find some entries here to trade my plan. I still have this Fibonacci area at this point, so I'm still bearish on this one. I'm not bullish, definitely not. Price didn't come to test the levels here, so retracement here. Maybe we're going to see some continuation. We will see what happens, unless this gonna go forever and takes this swing high to the upside and break above. Let's say if this one's gonna continue upwards and it's gonna make a higher high here, then yes, we break the market structure and we're gonna most likely look for longs. But until this happen, we still look for shorts. So Australian dollar, Canadian dollar, here is the upwards channel. Price moved up and it comes down. Here is a strong support. Inside candle, false breakout, and I'm looking for the move. So that's another one on my watch list. Let's see if we buy from there with a stop loss beneath here. We have 1.29 something. If we buy from here, it's not. So on 4-hour chart, maybe something here. So actually it's the swing of the 4-hour chart, which is fine. Any divergence? No, nothing so far. So another plan for today: Australian dollar, Canadian dollar. New Zealand CAD, nothing here. I have a plan again in place. I have the fib retracements and all the areas, but the price needs to move a bit lower. New Zealand CHF, nothing here. You see there is question mark. Is it a downtrend? We so far have a failure swing that neither the high or the low has been taken out. Australian dollar, Swiss franc. We had a winning trade here a couple of days ago. It was bearish engulfing. After bearish engulfing, entered here. I entered there. Stop loss there. Exactly one-on-one. It was somewhere there yesterday. And yeah, the trade is over. You see, guys, when I tell you at support we take profits or we buy, we don't sell at support. I also trade the same thing. I'm not saying something because I see the move played out and okay, now we're going to say that. No. My rules are what I trade. I trade the rules. I trade the setups. If before I enter the trade, I see traders, and again, it's something we are working on private coaching, because traders, they don't understand, because nobody, again, if you learn from a YouTuber, you maybe gonna end up doing YouTube videos, but if you learn from a trader, maybe you're gonna make money from trading. So a trading plan And I'm not saying that there are not good traders that they do YouTube channels. Absolutely not. I mean, by all means, but that's not the majority. That's the thing. So a trading plan, it's not only the entry. A trading plan also includes how much I risk per trade, includes if it's a high probability trade, which is going to or a low probability trade, and that's going to determine how much we're going to risk on the trade, and also includes if there is a room to make X amount of reward to risk. So everything we take everything seriously before we initiate any trade, and this this is an important part of a trading plan. It's not a joke. For many traders, they think, I'm going to enter the trade and then I will sort it out. No, you need to know exactly where you're in, where you're out, and why, and what's the room for the price to move in that direction. Everything needs to be taken in account. Canadian dollar, Swiss franc, it's something I would like to, I'm waiting for a while in this market here. And actually now I will place an alert. So let me explain you what I do here. I make my analysis on the weekend. I identified that at this support here, there is bearish divergence, price at support. Positive divergence. Price at support, rejected. I didn't enter with this price action because there is no strong price action to enter. As you can see, I have my plan here. MACD divergence, yes. So that's ticked. Strong support, yes. That was also ticked. Strong price action, no. So I don't enter the trade. And false breakout, if it's going to occur by the price action, that will be great. But important is the price action as well. So I don't have a strong price action like a bullish engulfing or a hammer. I don't enter the trade. Is this a hammer? No, it's not a hammer. It's just a weak rejection. A hammer needs to have at least twice its size a week. It needs to have at least a week that is twice the size of the body. So if the price is going to move lower, if this guy is going to move beneath this support, minor support area, then I will be looking for a false breakout to place a buy stop order to get feel if price is going to move higher. Again, German 40, we are about to enter the London trading session. Little bit of correction yesterday and early this morning, but who knows? I'm not doing anything with this one. It turned out to be super volatile, and if you're gonna trade on a lower time frame, just try to like this breakout here. And again, it's easy to see the move after it occurred and comment, but trust me, you have to learn how to identify these breakouts here. Okay, so I don't see a strong breakout here, but yeah, if price gonna make this, definitely we can get some good moves on the German 40. It's not something I will trade, but yeah, for those that want to take the trades, that's perfect. Okay, our pound US dollar trade is back to the entry. No, it's not back to the entry point, but yeah, it's moved against our position, but that's okay. We have a stop loss in place. We have a plan. We know why we took this trade, so it's all good. Guys, I think that's all from me today. I hope here at MarketMinds Mastery we are adding value to your trading, and we eventually want to help you to be developed as a great trader and investor. Okay, we are dedicated and it's our mission now to be the #1 online trading education platform worldwide, and I say that with all the belief, because the knowledge we bring out there and the and and the value that we care about each and every single trader, it's really unmatched. Plus, with the quality of the information, I would like to wish to everyone to have a fantastic trading day ahead. Remember that markets on the intraday basis today and tomorrow, they're going to play a little bit sideways. They're going to, especially the majors, they will anticipate a non-farm payroll outcome. So just take in consideration the volatility will be okay. It's just the quality of the moves. Okay, so if you find it appropriate to reduce a little bit your trading sizes around these events, that will also be something smart. And yeah, so have a great day, guys, and I will see you tomorrow again exactly at the same time. Bye, everyone.